So, how on earth does a company manage to boost its profits by over 500% in just one quarter? Well, that's exactly what we're going to find out today. We're digging into the latest report from Fortress Minerals, a really big name in the iron ore game, to see how they pulled it off.
We're going to tackle this from an investor's perspective, right? We want to know what's really driving their performance, if they can keep it up, and, of course, what the future might hold. So yeah, let's get into it.
Okay, here's the game plan. We'll start with a quick who's who on the company. Then we'll dive right into that incredible profit jump and figure out how they did it. From there, we'll take a peek at their financial health and wrap things up by looking at what's coming down the pike for them.
All right, first things first. Who exactly is Fortress Minerals?
So, they're listed in Singapore, and their main business is mining and selling high-grade iron ore, mostly out of Malaysia. That's the really good stuff that's essential for making steel. And, as we'll get into, they're not just stopping there. They've got their eyes on other important minerals too, kind of future-proofing their business. Okay, let's get to the good stuff. The numbers from their Q3 report that are, frankly, making a lot of noise.
First up, revenue. They pulled in over $18.3 million, which is a jump of 41.4% compared to the same time last year. Now, don't get me wrong, that's really solid growth, but it's not the number that's going to make your jaw drop.
Nope. This is the staggering number. Their profit, it didn't just grow, it absolutely exploded. We're talking over 500% growth, hitting $4.5 million. I mean, just think about that. That's a huge leap from the $740,000 they made in the same quarter last year. Wow.
So you gotta ask, right? How does a pretty good 41% bump in revenue turn into a mind-blowing 503% explosion in profit? The answer to that question, well, it tells you everything you need to know about how well this company is running.
And to figure that out, we've got to look at the two big pieces of the profit puzzle, what's coming in and what's going out.
Okay, here's clue number one. They didn't make all this extra money by jacking up their prices. Actually, the average price they got for their ore went down a little bit. The secret was all about volume. They just sold a lot more of it, almost 44% more than last year.
And to put a number on that, they moved almost 200,000 dry metric tons. That's DMT. It's just the standard way they measure this stuff. That tells you that demand in their regional markets is absolutely booming. But selling more is only half the story.
Because here's the other equally important side of the coin. Yeah, their total costs went up about 10%, which, makes sense. You make more stuff, it costs more. But, and this is the kicker, the cost to produce each individual ton of ore, that actually dropped by more than 24%.
And that right there is the magic formula. They sold way more product, and at the same time, they got way more efficient at producing it. It's a classic case of economies of scale. It's that powerful one-two punch, selling more for less cost per unit, that delivered that incredible 500% profit jump.
Now, a huge profit jump like that is awesome, for sure. But if you're thinking long-term as an investor, you need to know if the company's standing on solid ground. So let's do a quick health check and look at their balance sheet.
And the big picture here, it looks pretty healthy. You see, their total assets, all the stuff they own, grew a lot faster than their liabilities, which is their debt. That's a great sign. And their working capital, which is basically their cash on hand for daily operations, also went up. They're sitting on a comfortable $15.6 million.
So where's all this new asset growth coming from? Well, they're not just letting the cash pile up, they're putting it right back to work. They're investing in exploration, getting new mining properties, and seriously upgrading their equipment. This is money being used to build the company's future.
And what about the debt side? Well, the increase in their liabilities mostly comes from new bank loans. And this isn't necessarily a bad thing. It shows they're using debt in a smart, strategic way to fund their growth and keep operations running smoothly. For a company in expansion mode, that's pretty standard stuff.
All right, so that's a look at how they did. But what about where they're going? Let's switch gears and look at the future. What does the company see coming up on the horizon, both the good and the bad?
Well, it seems the company itself is feeling pretty optimistic. They're expecting demand for their high-quality iron ore to stay strong. And that's because of all the infrastructure being built in the region, plus this bigger push in the steel industry to be more efficient and, greener.
This table really sums up the whole push and pull they're facing. On one hand, you've got the risks, the headwinds. A lot of that is tied to what's happening with China's economy. But on the other hand, you've got these huge opportunities, the tailwinds. We're talking about growing demand in places like India and Southeast Asia, plus the fact that their own upgrades are making them more efficient, and their high-grade ore is perfect for that push toward greener steel.
And check this out. They're not just sitting around hoping for the best. This timeline shows they are actively building their future. They've already finished a new plant, they've got a huge facility planned for a couple of years from now, and another one is already being developed. These aren't just ideas on paper. These are real, concrete steps to make them bigger and better for the long haul.
So it all comes down to this one big question, doesn't it? Fortress Minerals just had an absolutely fantastic quarter, and they are clearly betting big on their future. But can they actually pull off these ambitious plans while dealing with all the ups and downs of the global steel market? That's the real challenge, and you can bet that's what investors will be watching very, very closely.